Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and why some hedge funds, fund managers, and smart money are buying Sofi stock right now and adding it to their overall portfolio and the assets that they are managing. We're also going to go over some of Sofi's largest investors and what the stock price could be worth in the future, as well as other news updates. And then we're going to move on and talk about Palantir Technologies PLTR stock and how the CEO has recently come out, who is Alex Karp, to say that there are terrible times ahead for the overall economy and the stock market. So you're definitely going to want to pay attention to that. For more videos on Sofi or Palantir, remember to go and smash that like button right now so I know what videos you all want me to make more of. Comment your thoughts down below of other videos or stocks you want me to analyze, or if you want more videos on Sofi and Palantir, subscribe or hit that join button next to the subscribe button so you can become updated on the latest Sofi and Palantir stock news updates. But without further ado, let's jump right into today's stories. So Sofi Technologies is a fintech company, or a financial technology company, that offers their consumers an all-in-one digital app which gives them access to various financial services and products. Sofi has been on an absolute downtrend over the last year, and some investors are thinking whether or not this is still a good company to buy. However, let's dive into this analysis and what this author has to say about that. Sofi Technologies' stock price is currently $5.02 per share, but professionals believe the company should be worth somewhere between $7 and $11. Also, I want to mention that we'll be doing a fair value analysis for Palantir Technologies to determine its actual fair value price target later in the video. We also have a couple predictions and price targets and price predictions for Sofi that we will also talk about, which I mentioned in our last video. But like I said earlier, the Sofi stock price has been on a major downtrend, losing around 60% of its value year to date. And this is a huge loss because compared to the S&P 500, which is a fantastic stock market benchmark, that's only lost around 23%. So if you want to invest into the S&P 500, I like VOO or SPY, and that has only declined at 23%, then Sofi Technologies' 60% loss due to the S&P 500 being extremely diversified in a variety of different sectors. I also, in the last video, mentioned very quickly how a senior investment analyst named Luke Lango believes that Sofi Technologies and their respected stock price could surge by around 25 times. So I basically went over his metrics and statistics and said it's complete BS. There's no way Sofi is going to 25x in the next 8 to 10 years, because he believes that Sofi can do this by 2030, which is just not in the cards for this particular company. And this is coming from a Sofi bull. I do own Sofi Technologies. I'm very bullish and positive on it. However, I'm not overly positive to where I'm just going to randomly hype up a stock just because I think it's going to explode, and I definitely don't think it's going to 25x in less than a decade, even if it's called or known as the Amazon of finance. I also don't like Luke Lango's analysis on how the stock price could appreciate 25 times by 2030, because he's estimating that 20% of the 18-year and older population in the United States will become Sofi members, and that's absolutely complete fiction. It's false. There's no proof of that. And also, there's no way Sofi, as a newer fintech company, can obtain a 20% market share in the United States. It's just not plausible, especially if we can compare this company to other banks and financial institutions such as Morgan Stanley, Charles Schwab, or Bank of America, or even banks like Ally Bank or Wells Fargo or Citigroup or anything like that, or JP Morgan Chase, like I mentioned. These companies took many, many years just to obtain the current market base and customer base that they have right now. So to assume that Sofi Technologies could have a 20% hold on the United States market is absolutely coming from left field. He also says that the company is going to trade at around 20 times their price to earnings multiple by 2030, which will make the stock price grow even more rapidly to where the company would be worth anywhere between $110 and $120 billion by that time. But that's absolutely ridiculous, ridiculous. There's no way SoFi is going to grow to a market cap that highly in less than a decade. Again, this is just not how stocks and companies actually work. Now, with that being said, I addressed more of that in our last video. If you want more information on that, go ahead and check that out. But in this video, I really want to highlight the top 5 investors that are betting very highly and heavily on SoFi stock right now. First, I want to start off just with general institutional ownership of this phenomenal fintech company. Now, even though I am bullish on this company, I do believe that the SoFi stock price and share price will drop more in the short term. However, despite this, during the second quarter, 444 funds reported owning SoFi stock in their portfolio, according to various 13F filings. And this would actually be an increase of around 14 funds since the prior quarter. So even though the stock price is falling, we are actually seeing greater institutional backing and ownership, not fewer. And I've said this before in other videos, but here are the top 5 holders of SoFi stock. The number 1 holder is Vanguard, who currently owns 61.96 million shares of this fintech company, to where they've purchased around 11.1 million more shares during quarter 2. We also have SoftBank, which recently sold about half of their shares, where they sold around 50 million shares. However, they still have 45.42 million shares in their portfolio, and the third largest institutional backer of Sofi Technologies is Red Crow Capital, which currently owns 42.65 million shares as of quarter 3 of 2021. Likewise, we have Silver Lake Group, which has 31.15 million shares, where they have not changed their position by either selling or adding more since quarter 2. And then lastly, we have one of my favorite backers, which is BlackRock, who owns 30.85 million shares, and they've actually purchased 13.61 million more shares during the second quarter. Now, out of all of these companies, I personally like Vanguard and BlackRock the best, and then probably SoftBank. But because SoftBank is treading water right now and losing money and burning money left over right, I would say that Vanguard and BlackRock are probably the most prestigious holders of this particular company. And it's also very good news that other funds and smart money are buying into this company, to where quarter over quarter we actually see a net increase of the overall amount of backing and institutional ownership for SoFi. So again, this is very positive news. But with that being said, I want to make sure that you know that I only have a 4% allocation to this particular company. I think while the stock market is falling and how the overall macroeconomic economy is very negative, that I don't want to spend money on risky growth stocks or technology stocks like SoFi during this current stock market environment. I would much rather start to dollar cost average into ETFs or even index funds, or buy blue chip companies during this time of stock market volatility, because we could see stocks continuously crash over the next couple of months. So please be aware of that. Practice proper risk management by not overexposing yourself just to a singular stock, and also use this time to average down and go into your very solid and core and fundamental plays, companies that are going to be around for the next 100 years or so. I really don't want you gambling with your money, especially during times of stock market uncertainty. This would be a great time to buy companies like Google, Microsoft, Apple, Amazon, Netflix, Disney, Bank of America, Coca-Cola, Procter & Gamble, P&G, and companies like that. We need large blue chip companies, preferably who trade at a good value and will give their shareholders dividends, so they can average down their average costs if they have drip investing enabled, where they are reinvesting their dividends back into the company which gave it to them. But that is our news update for Sofi Technologies and my thoughts on the current stock market right now, because I do believe the stock market could crash. That's definitely a potential, and that we could fall into a very negative recession. And even if that does happen, I'm not going to change my investment style much, because I am a long-term investor that invests the majority of my money, around 80% of it, in ETFs and mutual funds or index funds which grow with the economy. I'm really not trying to outperform the market. As long as I'm operating at market, I am very content, because it guarantees me that I won't underperform the market. And with that other 20% 90% of my portfolio, which I use to dollar cost average and invest into very risky stocks, not more than a 5% allocation to each one, I use those stocks to actually put me over and outperform the overall indices. But again, you should do what you think is best and what you're comfortable with depending on your age, risk tolerance, and investing strategy. And with that being said, let's jump over and talk about Palantir Technologies, where their CEO says that there are terrible times coming for the overall stock market and the economy. Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. Right now, the PLTR stock shares trade at $7.53 per share, while analysts believe the company should be worth anywhere between $6 and $20 per share. Palantir is another company where I think the stock price will fall again in the short term. However, Alex Karp is very comfortable talking about the long-term trajectory of this company. And again, because we're talking about Palantir, I'm going to give you the latest and the most up-to-date fair value price target for this company among professionals. Palantir Technologies co-founder and CEO Alex Karp recently went on CNBC and he stated that he believes that there is going to be quote-unquote terrible times coming. He said in the interview, and I quote, "What I think is going to happen is we are going to have a couple years of terrible times. Those companies that are most robust will survive and thrive. You'll get credit for it in a couple years." So basically, he's saying that make sure that you are investing in very resilient and robust companies that are going to survive the downtrend that we could experience over the next couple years to couple months. He thinks that not only are the macroeconomics going down the toilet right now because of high inflation and increasing interest rates and the job market and so on, but he also believes that geopolitical tensions are also going to increase. So make sure that your money is in a safe place. The CEO of Palantir also went on and he spoke about how the upcoming quote-unquote deadly macroeconomic conditions will cause multiple data analytics companies and software companies to fail. A lot of these newer startup companies and companies that don't really have proven fundamentals are most likely going to fail or go out of business during this very negative macroeconomic environment, which is going to be good or bad. That's just how the free market operates. You weed out the unsuccessful companies, and the very good fundamental companies tend to grow over the long term. To where the CEO of Palantir had to say this to follow up with that, and I quote, "Bad times are incredibly good for Palantir. Bad times really uncover the durable companies, and tech is going through bad times. Interest rates are the reason. Will this deadly tidal wave wipe out some companies? Yes, it will." End quote. And I agree with him. This is definitely going to wipe out a lot of companies, and for companies that are trading at a large premium, which would include Palantir, these companies are going to drop down to market value, if not lower, especially if these are growth or technology companies. During this type of macroeconomic environment, we want to focus on value companies and companies that are going to stay for the long term. So investing more into Palantir and Sofi may not be the best bet right now. At minimum, I would say that these are companies to hold through this very volatile time, but not the time to double down on these companies because we really don't know what the future holds as of right now. There's a lot of ambiguity and uncertainty in the market. But I want to reiterate that Alex Karp, as well as myself, are pretty excited, and we expect Palantir and their PLTR stock to appreciate very well over the long term, especially because this negative macroeconomic environment will weed out some of their competition. It will actually reduce competition for Palantir by putting other companies out of business. But then that begs the question, why wouldn't companies like Sofi and Palantir go out of business? Well, basically for similar reasons. Well, for instance, Sofi Technologies, I believe, won't go out of business because they are fundamentally very strong and their customer base is extremely strong and resilient and filthy rich. If you look at the FICO score, which is their credit score of the average customer of Sofi Technologies, and how much these young earners actually make, there is actually little to no threat that these people will default on their loans or financial products or services that they are obtaining from Sofi Technologies. So that's what makes Sofi resilient. But again, I would say it's a holding opportunity during this time just because we don't know what's ahead for the stock market. On the other hand, we have Palantir, who has written contracts with government institutions, and because the government's not going to go under, that means Palantir is not going to go under. Now, this is negatively going to impact their overall commercial segment, which I believe is actually more robust and will pass the amount of revenues that they are obtaining from their government segment, which is going to hinder them in terms of their profitability and their future projections, but I do believe that Palantir will survive this, but their stock price definitely will tumble downward as investors start to get skittish and squeamish and sell their risky growth stocks. But during this time, other companies that aren't as fundamentally solid as Palantir and Sofi will be going out of business, which is good for both of these companies because less competition, that means they're going to have an easier time obtaining a large portion of the market. I also want to say that as the Federal Reserve doubles down on their interest rate hikes by becoming more hawkish, where the latest basis point increase of interest rates was 75, we can anticipate at least another 75 basis point increase, if not more, in the future. So if you are an investor, you need to be ready for that. But again, this could be good news for Palantir as an overall company. And like I mentioned, they are not yet profitable on a GAAP basis. But the best part is that even if the economy crashes and we go into a very negative recession, Palantir has virtually no debt and plenty of cash on their balance sheet, to where they have approximately around $2.5 billion in cash, or at least short-term cash equivalents on their balance sheet, which means they could burn money for the next year or two and still completely be fine because they just have no obligation or debt to pay, and they have a load and a mountain of cash on hand. This is very, very good for this overall company, and although I agree that their stock-based compensation is definitely weighing down the stock price and could make it fall even more, once Palantir gets that fully under control, profitability in this company by at least 2025 is definitely in the cards, and once this company becomes profitable by the end of 2025, that's when we're going to start to see the stock price appreciate very aggressively. So I think, as well as the CEO of this company, that this business still has very good long-term potential value in it, despite negative macroeconomic conditions that we are facing right now. Overall, these tailwinds are going to be used as an advantage to companies like Sofi Technologies and Palantir Technologies because it's going to decrease their overall competition, and because these companies are fundamentally strong, they will survive because they're very competitive in their overall market. They have great technology and top talent. On top of that, Palantir has great capital on their balance sheet, and Sofi Technologies customers are not at risk for defaulting. But then this leads us to, what's the fair value price of Palantir Technologies? Well, I'm going to give a 2026 price prediction to where this fair value would assume a $16.50 PLTR stock price. And I know that may sound very low for some, but literally you are over doubling your money in a time span of just 3 to 4 years. And that may not sound very quick, but trust me, in the stock market, that is extremely quick to double your money that quickly and aggressively. Even if we discount back to the current share price of around $7.50, this would imply a CAGR of 27.5% from now until 2026, which is insane, and this author says it's a strong buying opportunity at the moment if you plan to hold this company until 2026, regardless of what the stock price does. Now, the reason this CAGR is very competitive in the stock market right now is because, again, if we use that stock market benchmark of the S&P 500, that only appreciates anywhere from 8 to 10% if we account for 2% inflation every year, so a 27.5% CAGR is almost 3 times greater than what the stock market would give you. So again, Palantir still looks to be a very good investment, but again, I reiterate that this is a company to hold during negative macroeconomic environments like we are facing today. But with a strong balance sheet, very high quality products, very good cash flow, this company is an attractive opportunity to at least hold through this stock market volatility and this high beta environment. I am prefacing, and I want to make sure that you understand that the Palantir stock price and the Sofi stock price can sharply pull back because of this very shaky stock market that we are in. However, they are set to give investors very considerable returns if you plan to hold this company for the next several years. Now, if you're planning to hold these companies for the long term, I would suggest that you lock these companies away for the next 5 to 10 years because you could be thanking yourself. But again, this all comes back down to your risk tolerance, your investing strategy, how old you are, and a plethora of other factors. For me, I'm not adding to either of my positions in Palantir or Sofi. I have around a 4% and a 5% allocation to these companies respectively, and I plan just to hold it through while buying very fundamentally strong blue chip companies that are going to give me very consistent dividends and are value stocks. So with that being said, I hope you stay safe in this very crazy environment right now for the overall stock market, and I hope you make plenty of money. With that being said, I will see you in the next YT video.